Okay, so good morning, traders. How is everyone doing? And welcome to September 28th, the market reel. Today, we're going to do our technical analysis and look at the market psychology. So, before we go any further, what is the first thing we have to do when we sit in front of our charts in the morning, right? We got to set our technical analysis, and the first question we ask is, what type of day do we have, right? um, let's take a second right here, right? We're in no hurry. So this morning, um, as you look at the market, right, as you look at this right here, right, what type of day do you believe this is giving us? You can write your answer into the chat box or the Q&A box. And yeah, so what type of day do you see right in front of us? Now, the first thing we might want to ask ourselves is, what are the days, that type of days that we can have, right? So the first one, it is a trending day, right? This is the first type of day that we can have, is a trending day. Then after, we can have a range day, right? So what is a trend or a range day? Well, that's very simple, right? A trending day is a day that will have a definitive direction to it. Now, a range day, it is a day that will oscillate between 2 points, right? So we have the range day, we have the trend day, right? Give me a second. And then after, what is the third type of day that we can have? Well, it is a spike or trend into a range, right? So we can have a trending day, a range, or a spike into a range. And what is a spike or a trend into a range? Well, it's very simple. It is something that looks like this, right? We get the spike, and then after, we start to oscillate into the range, right? So these are the type of days that we can have. So if we look back at our chart right now, what type of day are we having, right? Are we having a range day, right? Is it oscillating between 2 points, right? Is that what it's doing? Is it a range, or is it a spike into a range, right? Or is it simply a trending day, right? Well, the answer is very simple. It is a range day. If we go back into time, if we look back since yesterday, let me bring the chart drawing a bit closer together. That's a bit too much. Let's bring it higher. There you go. Sorry about that. So if we look since yesterday, right, we see that we've been having a range. Let me start drawing the range right here. Right, we see we've been having a range and about right here. Let's adjust this. Just give me a second. Just give me a second. Chat box. Get a message right here. Chat box covers the whole screen and it's hard to respond on that. Okay, so is there a way for me to remove the chat box if that is an issue? Just give me a second here. Let's see what I can do for you guys. There you go. Is okay, no problem. So the chat box, as long as you don't click on it, doesn't take too much of the screen. So you can also answer on the Q&A box, or you can also always click on raise your hand, right? And I will unmute your mic and you will be able to make comments verbally, right? So anyway, so let's keep on going right here. So we see we've got a range, right? And why am I not taking this right here, this movement right here as a range, as a spike? Well, because it's been negated with the previous movement in the back. So right here, I'm gonna keep going with my analysis. I'm gonna shave off, right? I'm gonna shave off the wicks of my range, right? Just to make it a little tighter. What does that mean, right? Well, if you look right here where those candles are, we see the spikes, right? That those wicks of those candle, uh, and those right there, they don't give us much information, and we can just shave them off, right? And once we've set our range, right? Once we know what our range is, then after we need to figure out our standard deviation. And this is very simple. If you have Syria, well, having a hard time with my words this morning, Syria chart this morning, as a charting application, you take your expansion tool. If you're using Ninja Trader, well, the same thing, right? You have the Ninja tool, the expansion tool, and then after you click at the bottom of your range, and you bring it all the way up to the top of the range, and right there you see the standard deviation. And what are standard deviation? Well, it's very simple. Standard deviation are merely zone or levels where we can expect to have the most trader waiting to find an opportunity to get into the market, right? So usually we never trade within the first standard deviation, right? We have our range right there. Range, we've never trade within the range, right? We never take a position that is trading within a range. There are a few exception, and once they occur, I will show them to you. But as a golden rule right now, we never trade into the range, right? In the middle of the range, we stay the hell out of it. And as a good rule, right, we always wait that it push further than the first deviation, right? Because within the first deviation, you are too close, right? You are too close to the middle of the range. And for that, it's not giving the right value for our trade. And what do I mean by the right value for our trade? Well, in market psychology, it is stated that the market will always retest its previous move, right? It is not a something that happens 100% of the time, but it is something that happens often enough, right? Often enough to let us know, or that we can guesstimate that we can get into the market with some profit. So what does that mean, right? Well, let's look at our chart right here, and then let's look at this market right now trading into the range. If we wanted to get into a position, the only place that we can find value from the trade would be from its previous move, right? So right here, this is where the market is going to try to reach, because the market will always try to reach a goal, right? The market never moves in with uncertainty. It either trying to reach a previous high or retest a previous low. This is the heart, or I can say, of the market, right? So if right now we wanted to take a trade on the long side, right, for the bulls going to buy the market, well, the only value we could find would be from, right, this deviation back up to this previous high. So a 6.5 points risk reward. And for that reason, there's not much value into it versus, right, if we just look at the bottom right there, right, if we look at the bottom right here of, let me grab my tool. If we look at the bottom right here, where was its previous open loop, its previous high, right? Well, the previous high was right there. So if you take your measuring tool and you look in between the 2 points, right? Well, that's giving you a risk reward ratio of 30.75 points, which it is a lot better than within your first standard deviation to the previous the previous high right here, which in a sense, not in a sense, but which is telling us that there's not much value. So right now, what we have to wait is for a proper pullback, right? The right pullback to give us value to our trade. So we have a good risk reward ratio, right? So anyways, that being said, and now that we've looked at where our standard deviation is, the next thing we're going to look like, if we remember yesterday, you just give me a second, I'm going to bring up yesterday's chart. Okay, so if we go here to, is it the right picture? There you go. Got it. Perfect. So if we look right here at our chart from yesterday, well, we see a pendulum swing right here, right? Let me grab my annotation tool. And we see right here, yesterday, we had a pendulum swing. And what is a pendulum swing? Well, as above, so below, right? This is the golden rule of a pendulum swing. So whatever happened on top will happen below. So let's bring right here, let me grab my pendulum swing tool right here. So we see that the market pushed all the way down here, right? During the evening session. And then, give me a second right here, we see it did not retest the high, right? So there's a good chance that from here, we're going to see the market come back down to the pendulum swing area, and then after try to take the market all the way back up for the pendulum swing. So this is, as of right now, and it doesn't mean that we cannot change our position as the day is progressing, but as of right now, this is what we're looking at. We're looking for a nice pullback so the market gives us the right opportunity and the right value for our trade. And this morning, let's take a second right here. I'm going to bring up a page. Just give me a second. Let's look why the market is so slow. So slow. Just give me a second here. Let's look at what is going on today. Why isn't the page popping up? Just give me a second, guys. I'm sorry about this. Because at this time of day, the market should be moving a lot faster. Market watch. So give me a second. Usually I have a website that gives me the the timeline for the news today. There you go. Just got it back. View full calendar. Perfect. So let's bring up this sharing. There you go. Awesome. So what do we have today, Tuesday 29, that is slowing the market down? Well, at 8:30 this morning, we had a report, but that was at 8:30, right? What else do we have? Okay, at 10 a.m., we get a consumer confidence report. And at 9:30, we've got a Patrick Harker is speaking and John Williams speaking at 9:15. And then the house price at 9 o'clock, right? 9 o'clock is gone. 9:15 is gone. 9:30 is gone. So all we have left is at 10 a.m. And let's go look what the wait a second. There you go. It's rain. Okay, so let's see. Maybe this is why the market is so slow this morning. Maybe there's people are waiting for that news at 10 a.m. in 23 minutes to take a position on the market. So for that time, for the next 23 minutes right now, the market might be a little slow. We'll see what's going to happen. And we keep oscillating back into the middle of the range, right? So anyways, that being said, let's wait a little bit. So in the meantime, guys, do you guys have any question? If you do, please type them in the Q&A box, right? And I will be able to answer them to you. And if not, well, let's see what the market is going to do. And in the meantime, just give me a few minutes. I'll be right with you guys. I'm going to go get myself a glass of water. Okay, so in the meantime, let's talk a little bit about the market psychology, right? So what makes the market move? Why does the market move in a definitive direction? Up or down, right? Why is the market moving? Well, the answer is pretty simple. The market is driven by two emotions. The first one is hopeful or hope, right? So people, traders are hopeful to make money. Or second emotion, traders are fearful of losing money, right? So those are the two emotions that drives the market, right? When people are hopeful to make money, they get into the market. And when people are fearful to lose money, they get out of the market. And each candle that you look at represent just that, right? Just give me a second. Let's look at, let's draw a candle right here, right? And let's put it, so let's draw a green candle. What does a green candle mean, right? When you look at a green candle, what story do you tell yourself looking at that candle, right? Well, it's very simple. A Japanese candlestick, this is what it is right here, right now. A Japanese candlestick tells us a story, and each candles makes up a movie, right? And this is why we call this webinar the market reel, right? Because we're looking at a movie unfold itself, and each candle represent the condition of the market. So when you look at this candle right here, what is it telling you? Well, the first thing you can see, right, when the candle is green, right? When the candle is green, and let me just draw a red candle right beside it so we can give some good explanation as we go along. And if you guys know what I'm talking about and you don't want to hear about it, just let me know. I'll switch to the next subject. But in the meantime, it gives us something to talk about while the market is going pretty dead. Other than right now, we just had a flash crash. We'll see what's going to happen. I'll bring back the chart once we have something worth looking at, right? So anyways, that being said, what does a red and green candle mean, right? Well, the green candle, when it is green, it is telling us, right, that right here, the candle opened up. And then on top right here, the candle closed, right? And what determines, I think it's the right word, right? What determines the opening and the close of a candle? Well, that is the type of chart that you have, right? If you have a time chart, right? Let's say you have a 1 minute chart. Well, that means that every candle is equal to 1 minute. Now we trade on tick chart, right? Tick chart or trade chart means that my chart are equal. Just give me a second right here. One candle is equal to 1,000 tick or 1,000 trade, right? So when you look at a tick chart, a 1,000 tick chart at a candle, each candle represent 1,000 trade. Now you could have a volume chart, right? Just give me a second. You could have a volume chart, and the volume chart will give you, let's say it's 1,000 volume chart. Well, that means that each candle equals 1,000 contract, right? We have 1,000 trade, meaning that this is 1,000 orders sent to the market, and a volume chart would mean 1,000 contract traded. So let's get back to our horses. We have 1,000 trade chart, and each candle represent 1,000 trade. And on a green candle, well, you can see right here that the market opens up at the bottom and closes at the top. And then for a red candle, well, that means that the red candle, the candle opened up at the top and then closed at the bottom. So if we look a little bit at the movie reel that a candle would give us, well, it would be that the candle opened up right here, right? This is what it did. And then after it went down, right? And this is the wick we see. The wick is when it went below its opening, but then after shoot it right back up, right? All the way up past its closing point. So at some point, this candle was, all this portion was all green. And then after pushing down, and it closed right here, right? So this is what the green chart is telling us. And the same thing for, not the green chart, but a green candle. And then for a red candle, well, it opened up right here. It closed right here. And in between, it went all the way up to here and push all the way below here, coming back up and closing to its closing point, right? Does that make sense to you guys? Do you guys understand understand what I mean by this right here? What a candle is doing, right? So let me just clear a little bit. Let me just clear a few of the drawings right here to make this a bit more cleaner. Can I? There you go. That's it. A lot faster. Okay, so let's keep on going. So what makes the market move? Well, the market moves with two emotions: hopeful to make money and fearful to lose money. So let's bring a chart and look a little bit at those candle and see what they are doing. Let me bring back our chart. Right, we see right here at the same time as well, the market pushed down a little bit, but it went to our second standard deviation, but did not give us a pattern. And so for that reason, we're staying away from this. So anyways, that being said, now when we see, right, when we see this right here, when we look at our chart, it is actually telling us a story, and it is up to us to decipher what that story means, or the perception we get from it, right? So, and I'll give you an example. We'll take just this portion right here to understand what happened, right? We see the sellers getting into the market, right? As we reach this area, every time it gets pushed down. So we can be pretty confident that right here is a zone, right, where there is a lot of sellers waiting to bring the market back down, right? That's what they want to do. They want to bring it back down. But then again, right here, we've got a lot of early buyers that want to push the market back up, right? So we can see right here that the market was pushed down by the sellers, right? In this portion right here, the market was pushed down by the sellers, the short traders. And then we see that right here, right at this, right, this candle right here, the buyers got into the market. They pushed all the way back up, and then they failed, right? They failed to push higher. The seller took back control of the market, and right here, you see, it created a small trap for the sellers right here. And why is that? Well, we see that the market was pushed all the way down by the sellers. Right here was an area where a lot of buyers were waiting, and they pushed the market back up. And let me bring my annotation tool. See, they start pushing the market back up right here. And what happens, what is a trap? A trap is something that is going to slingshot your trade, right? Now, like I said, it did not give us a patterns for us to take the trade, but you can see that if we would have taken a trade, our trigger would have been right here, right? This is where our entry point would have been to get into the market. And this candle, sorry, and you guys let me know if I'm not making sense or if I'm a bit too scattered, but this candle right here, just mouse, okay, this candle right here is where all the buyers got into. And then now this candle and this candle, it is actually the sellers, right? These candles are actually the sellers right here. Whoops, give me a second. The sellers right here hitting their stop loss there and there, pushing the market up. And why is that happening? Well, the stop loss act as fuel for the buyers. Every time it gets hit, it sends a buy signals to the market, which it in return pushes the market all the way back up. So this is a little bit of the movie reel, right? The market psychology that goes behind our trade, and why are we looking for those patterns where we're looking for those subtle little bits of information that will give fuel to our trade, and then so we can get have confidence to get into a trade and be profitable, right? So anyways, that being said, we'll see what whoops, what's gonna happen. Give me a sec. Whoops, no, clear all drawings, and then after, take this away. There you go. Let me clean up a little bit the chart so we can see what's happening better. Anyway, so that being said, this is a little bit of information I wanted to give you this morning, so you can make sense of what you're looking at right now. Like, the market is not simply moving because it wants to move. It is moving because of the collective consciousness of the financial market, which being the futures market, the stock market, all the markets are working in correlation with one another. One is not dependent of the other, but all of them influence each other, right? And the market is not moving by magic, but really because there are some traders behind the market that have an emotion that translate into an action, and that action has consequences. So really, when you're looking at the market, don't look at supports and level that well, at 33, 32 there is a support level, and at 33, 30 you should put in your buy order and then come out at 33.48, right? The price in itself has no bearing on our decision making, rather than the market psychology. This is what we need to pay attention to and make sense in our mind, so we can take clear decision on what is going on. So we're 7 minutes away from the 10 o'clock Shaw. So we never take a trade from 10 to 10:05. Today we have a news coming out at 10, and hopefully, right, hopefully it's going to make the market move, because right now the market is really, really slow. If we just, let me take a second right here, if I can show you the market. Do I have, no, where it is. Okay, let me put it this way. So if we look at the market pulse right here, we can see that the E-mini 500 December contract today, so far 339,000 contracts were traded. We should be well above 500,000 to 700,000. Sorry, we should be well above 500,000 to 700,000 contract traded. So right now the volume is really high, is really low, sorry. So it is not giving us good trading opportunities. So we'll see what's going to happen as the time progresses. And again, if you guys have any questions, let me know. It always helps to move the class forward. If not, we're just going to wait a few minutes, see if something's going to pop up. It is a very, very choppy day, right? It's just we keep oscillating in our range, right? Just keep oscillating, never giving us any patterns. So these are days that are very, very hard for a trader. And I'll tell you why. And this is what's going to happen, right? Is right now when you're in the morning, you're disciplined, you're in front of you, sitting in front of your computer, you've got all the best intention in the world, right? And this could go on for a day, a week, a month. The market can always be erratic for a very long time, right? And doesn't give us any trading opportunity. We look at the market, and after some times, right, and especially when you're a seasoned trader, right, after a few hours sitting in front of your computer screen, you want something to happen. And then after, we have what it's called confirmation bias, right? This is again in market psychology. We look at the market, and then instead of analyzing what is in front of us, we start to forecast what we think will happen. And this is when we start to take a really bad decision. And this is why we need to stay disciplined at all time. It is very important. If not, we'll blow our account very quick. And trust me, you're better holding off a few days, a few weeks without trading than starting to make bad decision, blowing a few thousand off your account, and then again spending a few days or weeks covering that loss, right? So we're better off to be disciplined. And this is one of the main reasons why I'm teaching you guys in the morning, because it keeps me accountable to what I am doing, right? I make sure that I take the right trades to be the right example for you guys. And this, it keeps me disciplined in my trading strategy. So yeah, so the times like these, we need to be disciplined more than ever. And again, it is not the time to start surfing online, to go look at your Facebook account or whatnot. This gives us, this is no good, because our mind is not into the game, the trading game. And again, we start making bad decisions. So let's hold off instead of trying to find a trade. Just let's hold off to see what the market will present to us. And once it presents the right market condition and the patterns, then we can analyze the market psychology and get into a trade, right? Yesterday we took one trade during the trade room, and then I took one trade afterwards for only 3-point gain on the day, no loss. So this was a winning day. So now let's wait to see what's going to happen here. Again, if you guys have any questions, don't be shy. Just type them in the chat box, the Q&A box, and I will be right with you. So in the meantime, the market is not dishing out anything. Let's talk a little bit about, just give me a second, our trading journal, right? Because like anything else in that we do, to be disciplined, a very good way to do so is to hold a diary, right? A journal of our trade, of our emotion, state of mind, thoughts, fear, happiness, whatever. And this over time will paint a portrait of how we feel and how we interact with the market, and we'll be able to adjust ourselves accordingly, right? So let's take this right here. Give me a second. Let me share with you. Okay, so why is it not showing there? No problem. There you go. So let's bring it up right here. So we see the journal, right? So you can always have the Dear Diary and whatnot. I have a few template, right? So we can go to Trade Journal. So when I do take some trades, I log them in with this template right here. But for all intended purposes, whoops, that's not the right one. Just give me a second. Here. So I'm trying to find the right template. Let's just do a side note before we go any further, because we see right here, right, the market is trying to push a little bit lower down right here. So we might find a trading opportunity, but in the meantime, if it goes lower, right now it's not giving us any patterns. Let's wait to see if it goes lower, but in the meantime, we'll get back to our journal, right? So my day, we'll go with trading journal, right? And the reason why I put a header right there is because in my application, I log like my trading journal, my personal thought, my memoirs, and so on and so forth. And by always starting it the same way, I'm able to sort them out afterward and find what I'm looking for. So today, right, market condition is very, whoops. It's very slow. Low volume and residing into a range. So this is what I'm going to put in for now. As the day keeps on going, I will keep logging in my thought as we go along. And again, side note, the trading journal has greatly improved. I would say that has improved my trading career by 40% at least, right? Just with the journal, because when you hold your journal, you cannot tell yourself different stories, right? Because you can make yourself all the excuses in the world when you're just recounting your past trading days in your head. But when you have a journal and you go back and you look at your chart, you see the mistake that you've made, and then you correct yourself, right? So for that reason, get yourself a paper journal or an application journal, or just use, if you need to, just use, what do you call it there? Just give me a second. I'll bring back your chart. Or just use a text document on your computer, or Google Documents online, but log your thought, log your journal to make sure that you can keep yourself accountable and adjust yourself accordingly when you make mistake, and also reinforce the correct behavior, right? So you can do a positive reinforcement when you do something good. So I will add in my journal, right? I will add in my journal that today is a good day to practice my patience, keeping on the sidelines sorry, I was just keeping an eye on the charts right here. So keeping on the sideline, waiting for the right setup, trade value to get into a position. There you go. Okay, so right here, the market might give us, right? The market might give us a trading opportunity on the sell side. Let's see if we're gonna go and retest the day's high first and foremost, right? This is what we want to see right here. And are we, and sorry, not are we, but we're waiting right now for the market to at least go all the way back up and retest the previous high. And then in this area right here, we can expect to have lots of sellers waiting. Whoops. There you go. So we can see, hope or expect bears to wait to bring the market down. There you go. Into the bear zone. So here's a few scenarios that can happen, right? Is the market can go into the bear zone, give us a pattern, and then after we can get into a short position, or the market can go up, give us our retracement, right? Give us a retracement, our pattern, and then after our trade, right? So we can get into a position. So anyways, that being said, let's see what's going to happen. What is the market going to give us out? Or it could very well collapse all the way down here, give us our pattern, and then after back into the today's high. So those are the three different scenarios right now. Or actually, no, actually the fourth scenario, right? It could, give me a sec, let me grab this. So it could very well give us a short position, right? A short trend or a short spike. And then we wait for our pullback, again, our patterns, and back down. So let's wait to see what's going to happen here in the meantime. And a waiting game. I'm sorry about this, guy. I'm sorry. I wish it was moving a bit more, giving us some more opportunity to get into a trade. But right now, there's not much happening. Still haven't broke the 400,000 contracts traded so far. That's a very, very slow day. 10 a.m., the news came through, right? The news came through at 10 a.m. It gave us right here, right? It gave us right here this little spike, but that is pretty much it. That's all she's saying. Yep. So 50 minutes left to our trading session. Let's hope that we're going to get something worth trading. Is there anything that you guys want me to elaborate in the meantime? Do you guys have any questions? Do you guys anything you would want me to talk about? Risk management, contract rollover, broker, how to choose the right broker, anything, right? Let me know. If not, I'll find something in a couple minutes to talk about. It shouldn't be too long. Okay. Okay, there you go. Well, if you look right now, it is only in the second standard deviation close to the highest high of the day. But right now it is close to offering us a pattern, right? Right now, we see that the market is almost reaching the highest high. And yeah, it is about to maybe dish out a pattern that we could trade. The only thing, and I'm hoping not, right? Because the only thing right now is we're really close from the middle of the range. And if the whoops, let me grab this. And if the market moves here to give us the pattern, it might be too close to the middle of the range. What I would like to see it do right now is maybe something like this, right? I would like to see something like that. So let's see what it's going to give us in the meantime. In a couple minutes, we'll talk about our volatility index and our risk reward ratio for us to decide to get into a trade or not. That, or we can also talk about the types of candles that we can have, right? We can talk about the dojis, the hammer, the morning stars, or we can talk about our risk reward ratio with our volatility index to help us know how to manage our trade, where to put our stop and our target. So if you're let me know what subject you want me to talk about. Do you want me to talk about the volatility index with trade management, or do you want me to talk about the type of candles that we can see in the market. Let me know in the chat box or in the Q&A, right? You can click on the Q&A right at the bottom of your screen in the middle. You click on Q&A, and then you can type in your questions or into the chat box, and we'll figure out in a couple minutes what we're going to talk about. Just want to see right here if this is going to give us a pattern, right? A two-tribe pattern. And if it does, if we get a big candle, right? A big candle closing right here as such below the RSI, then we're going to really consider getting into a trade right now. It's not the perfect location, not even close, but then again, we could very well see a nice trade. So let me just get my order ready. Let me get an order ready. There you go. Oops. That I don't like to see though, right? Because if this candle, give me a second, right? If this candle right here would have closed below the RSI, I could feel confident that the market would have kept on going lower, right? At least into the range and then maybe even some more, right? But here where I have an issue right here, whenever we get close to the RSI, the short sellers are unable to keep on pushing the market, and then the buyers take control of it and pushes it right back up, right? So right here in this zone, I don't think we have enough sellers to push the market any lower. So I'm going to pull my order away, and I'm going to wait for the market to give us a better position and pattern to get into it, right? I would like to see it go all the way into the bear zone right here. Again, when we reach the double top, right, when we retested the high right here, if this red candle right here would have crossed the RSI, then maybe with the EMA, then with confirmation with my RSI and MACD, I could feel confidence to get into the market. But the second we got close, even after retesting the high, it got pushed back up. So I lost confidence in this zone right here, and I'm going to wait for the market to offer a better position. Now, and this sucks, right? This, I hate looking at when this happens right here. Now it went a bit higher up right here, maybe giving a trap, offering a strong candle, but it didn't get to close below the RSI, right? It didn't get to close below the, not RSI, but the EMA, the exponential moving average, and then right away gets kicked back up by the bulls, right? The buyers, the long traders. So let's see what's going to happen. So now to feel confidence to get into the market, what I'm gonna need it to do right now, right? Because of this little baggage right here that happened, I'm gonna need the market to go down like this, a bit up, give us a pattern, and then after sell the market, right? This is what I would like to see right now. Because as of right now, this can at any given time shoot right back up. I don't have confidence in this area right now. And we see right there a gap, right? Did you see that right here? We have a gap. So often this gap, the buyers are going to try to close the gap. So let's see what's going to happen. Right? So maybe something like this, give us a pattern and then goes back down. Come on, don't go back to sleep on me again. We are at 430,000 contract traded so far, still very low volume. So maybe this afternoon session will be a bit more active, but right now it is a very slow market. See what I mean? You don't like to see candles like this. This is not fun. Anyone in a short trade right now is sweating balls like, oh no, it's gonna go back up and retest the high. And you'll see if it's happening because it's gonna pop, right? And once the stop order starts getting hit, right? There's probably some stop orders right here, right? There. Let's go boom, boom, boom. And then after back down. If my analysis is right, anyways. So we either want to see it come back in this area right here, or give us our pattern right here going back down. Let's see what it's going to do. Okay, so now maybe if we get a strong closing below the EMA, the exponential moving average, then maybe we will find a trading opportunity. Let's see what's going to happen here in the meantime. All right, let's see a big, nice green, sorry, red candle right here. That would be our trigger, entry trigger. There you go. So at the close of this candle right here, wow, that's, oh, geez, that's a big candle. So let's, there you go. We are into the contract. Let's hope that it's going to keep on going down right here. It gave us our entry, right? So now let's hope that it's going to pan out. And it looks like it's going to kick us right out. Hopefully not. Hopefully not. But we can see. We will see what it's going to do. Right? We are in a position right now on the short side. We are waiting to come back all the way down here to retest today's low. I don't like how slow this is moving. I would have liked to see bigger movements, but let's see what it's going to do. Have some falling, whoops, some falling resistance right here. Now we want to see this candle closing below the EMA. See, this is painful. I would have liked the trade to already be done. I don't like too much when trades are taking a long time like this. So once we push through our point of entry, I'm going to move our stop to the point of entry. I mean, I'm going to keep it tight just because right now, how it moves, it can very well come back and stop me out. So I'm going to try to minimize the damage if it doesn't keep on going. So let's see what's going to happen right there. Right, we see that the buyers are trying to defend their position. There you go. Keep on going for the sells. Come on, you guys can do it. Push it down. Right, the buyers are failing. The sellers are taking over. This is what we want to see right there. It keeps on popping right here. So let's see what it's going to give us on the next candle. So we're back to a point of entry. And I'm thinking right now of closing my position. But then again, I don't want it to close my position and then after it, just goes down without me. So let's just see a few more minutes, right, what it's going to do. And if not, then we'll move our stop to our break-even point, and that will be for today's trade. Let's try to take in a little bit of profit, a little bit of something, right? Just for this time waiting on the, come on, push it down, push it down. You can do it. There you go. So we took in some profit right here. I'm going to move my stop to break even point, right? There you go. See, this is how we like to see it. So then again, very volatile. We're going to trail a little bit just because it can reverse at any given time really, really quick right now. Just the way it is moving, I don't have much confidence right now. So there you go. It kicked us out at 2.25 points profit. And usually I don't close my position this way, but just the way the market was moving, the battle that we had right here, right now, did not make me feel confident in what the market is going to do. And right now we can see, now we can, but it could very well decide to go back up. It gave us a nice little push, a 2.25 point gain for the day. So this is making me very happy, a little bit upset that I'm not still into it, like looking at the market move right now. But like I said, I'd rather to protect my profit than to register a loss for the day, right? That being said, if it would have right away went into it, did that movement that we can see right now, we would have kept our position. But because it took so long for the market to dish out what it wanted, I felt more comfortable keeping my my stop a little tighter, so it does not, so we didn't register a loss for the day. So as you can see, a 2.25 point, that's not a lot, right? $112.50 on the day. It's still better than a loss, so that's very good. So in the meantime, do you guys have any questions? Please type them into the Q&A box and I will answer them right away with you. Now it's pissing me off a little bit that I closed my position, right? Just because it pushed all the way back down. But here's a few things to discuss about the trade, right? Here's a few things to talk about the trade. Let me close this right here. Okay. So a few things that made me nervous. First of all, I would have liked to see this candle right here, right? Do you see this candle right here? I would like to see this candle close. Whoops, give me a sec. Draw. I would like to see this candle as such, right? Closing right below the EMA. But now instead what happened is the candle closed halfway through and then a second candle pushed all the way down, right? All the way down here. And then after it closed right here. Now, the problem with that is it did not give us a good risk reward ratio. Okay, and this is another reason why I closed my position, is we were not in a good position where it could have reached and did a trace back, like a pullback, a retracement, and kicked us out. And what do I mean by this? Right? Just give me a sec. Okay, so as you saw, I've put my stop right here. Right? This is where I put my stop, right? My stop loss. So my risk today was, we go from here, right? My risk today was 19 ticks, 4.75 points to go back on the risk level, right? This is what I was risking if the market was pulling back on me. And then after you saw it started to it retraced back into this area right here. And what I was getting concerned is that it would define a new range coming to here, right? It started to move into another range. So what I was getting afraid is, if this right here, if this portion of the market was becoming the new range, then the market, right? The market could have given us just a nice pullback, and then after came all the way back up and stuff us out, right? Now, in hindsight, 2020, looking at this right here, right, we can see that the market went and tested all the way down to the pendulum swing, right? You can see right here, the market tested down all the way to the pendulum swing. And if I would have been able to get into the market right here, right? If I would have been able to get in, my trigger would have been right here, and I should have waited, right? Again, instead of doing a stop limit order, I should have got it in with a limit order, meaning that instead of waiting for the market to go down to my price order before getting me into a position, it would have waited for the market to pull back, right? To pull back into my price to get me into a position. But anyways, that being said, we did not have a good risk reward ratio, right? Because the 1-to-1 on this, right? The 1-to-1 ratio on that one was from here all the way down here. So this is where my first target should have been. And you can see, right? We've reached that oh, just give me a second. This is not where I've put it in. Just let me adjust. My order was right here. So this is where my first target was. And where did I come out? Show my, whoops. Trade, show the position. Okay, as we can see, we went higher than the 1-to-1, but back into the middle of the zone. But as you can understand, the market condition was not optimal for me to feel confident to keep my position open. And I was, I rather wait and close my position, record a profit rather than a loss. For those reasons, I hope I made sense. I feel like I got scattered here a little bit. If it didn't make sense, please let me know, and I will explain it a bit better. But that being said, I'm very happy with the result for today. Let me just remove this. I'm very happy with the pattern that came out today. We can see what it offered. Now it's just too bad that the condition was not better for us to hold the position and then record a full profit day. So now 7:40 on the day, 20 minutes left to our trading session. And let's see if the market is going to offer us something of worth. We have 500,000 contract traded so far. Right now, we should be around 900,000 to 1.1 million contract traded. So still a very slow day for the moment, right? Still a very slow day for the moment. But that being said, in the meantime, let's talk a little bit, right, for trade management and risk reward. Now, we don't usually trail our stops so close, but because of today, because of the condition, because of the market being so slow, and you will see, right, on days that the market is going to be very, very slow, we're going to see a lot of volatility. And volatility is the trader worst nightmare. The reason being is when you have high volatility, the market can stop you out over and over, even if you're wrong every single time. And what do I mean by this? Let me bring up my whiteboard. In the meantime, I'll keep an eye. On the market. Yeah, I'll keep an eye right here on the market, and I will give the explanation. Let me just grab my drawing tools. Okay, so we'll go take it. Yeah, black. That will do. Okay, so when the market, the hell is this? Oh, give me a sec. Wrong one. There you go. What is going on, my friend? Okay, just give me a second, guys. I'm having an issue right here. Whiteboard, select. Okay, there you go. So I've got this right here. Okay, so let's talk a little bit about what happens when you have a high volatility. Well, on a high volatility day, right, the market can be moving in a definitive direction, right? Oops. Right here. And then after, give us a pullback. Then after, will offer us a pattern, right? And then after, will give us our, and this one right here, right? This candle right here would be, let's say, our trigger candle. This would be our RS, whoops. I'll get better use of those tools over time, but here, what the hell? Why isn't it not giving me what I'm asking? Whiteboard, okay, there you go. Okay, now I understand. Okay, so now this could be our, whoops, give me a sec. This could be our trigger candle, but because of high volatility, then instead of giving us maybe a small pullback, right, it will give us a big pullback right here, hit everyone's stop loss, and then after, just as quick, give us a high candle going back into the direction we had predicted, right? So this is why on high volatility day, you have to be very careful. And today, because of the market condition, we did not get high volatility, but the condition stated that we could very well do have a high volatility day. And for that reason right there is why I close our position, because I did not feel confident that the market would keep going in the directions we were hoping, or if it did, then it could have very well, before offering, just give me a second, before offering the before offering the continuance. And what I mean by this is we got into the market right here, and this, you see this big candle right here could have very well been one like this before it got us back in and took all the way down, right? So I hope this makes sense. Let me know if it doesn't. I'll try to be clearer the next time. But this is why we close the position. So on that note, and let's keep on going. Just let me check something here. We can maybe hope for a retracement, right? If we get a retracement, oops, just give me a second here. There you go. And why are you not? This chart is chart number, yeah, this is chart number 4. Just give me a second. I just need to, because it's not popping up what I'm expecting it to do right now. Just give me a sec. There you go. Number 4. There you go. Fly. Okay. Okay, for some reason must be a glitch in my software. My Fibonacci is not showing up on that chart. So I'll draw from this chart right now. Usually I draw another chart and it appears on that one, right? So anyways, now we see this big movement. We've pushed through our standard deviation. Sorry, just give me a sec. Ooh. Now, that doesn't mean that the market cannot try to get back into the range, right? The market could very well try to make it all the way back up here. But right now, we can feel pretty confident that we are getting a spike into a channel, and the bear has taken over the market. So what does that mean again for us? Well, now that it might be a bear into a channel, I will come right here. I will minimize, whoops. There you go. I will minimize this one right here. I will cut this one right here. Excellent. So now we see that the market is going all the way back down. So we have a spike and what looks it's going to move into a channel. So I'm going to draw my channel right here. So I'm going to go right there, draw my support line. Whoops, give me a sec. Draw my support line right here. And then after come on top right there and draw my resistance line, right? So we can see if we'd be an aggressive trader, we can sell, right? We can sell a strong closing short candle, but that would be, in my opinion, a gamble trade. What I would like to see is an overshoot, right? An overshoot breaking the channel, then after retest, and then give us a pattern with a fail, bringing the market all the way back down, right? This is what I would like to see, and we'll see what is going to happen, if the channel is going to hold, if the bears are going to be able to keep hold of the market and push the market all the way back down. So let's see what's going to happen here. So we see we're getting a break of the channel, right? Hopefully all the way up to 38.2. At 38.2, I'm expecting sellers to be right here waiting to push the market down. Okay, we've seen our pullback right here. right? A gamble trade would be if to get into the position right here at the close of this candle. We have less than 200 contract left to trade at the close. But you see that the bears are doing a good job defending their position. Not the bears, sorry, the bulls. The bulls are doing a good job defending their position. So let's see what's going to happen. For me, like I said, if it does not give me a pattern, if it does not give me the right market condition, I do not get into the trade. Come on. 8 minutes left to our trading day. 8 minutes left on our trading day. So let's be hopeful that it's going to give us our pattern before we close our position. We close our trading room. Sorry about it. See, flash crash right here. These right here makes me uncertain about what the market wants to do, because often when you see a flash crash right like this, you will see just as quick, right, the bulls defending their position and could bring the market all the way back up, hitting all the stops, and then boom, 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 right? So 5 minutes left to our day. Do you guys have any question before we close our trading room? In the meantime, let's see if it's going to offer us a pattern. Look at that. Look at that candle right there. See, now we're starting to see some volatility get into the market. That means that we have a lot of traders stepping away from their desk, right? That's what it means right now, is we have a lot of traders stepping away from their desk. And you can see, right, it moves in a direction, then it crumbles down, then it slows down a little bit, then back up again in one shot, like a 1 second candle, then dies down again, right? This is what I mean by volatility. So if we would want to get into a trade right now, we'd look for something like this. Oops. I would look for something like this. Then we could look for an entry point around this area right there. Let's see what the market is going to give us. You can see right here, we're starting to get a zone of support that we have to be mindful of, right? Because those zone of support are telling us that right here, we have buyers, whoops, not red, let's put it green, buyers waiting to push the market up. They're just waiting for the price action to get into that zone, right? So we have to be mindful. It doesn't mean that the market can't go any lower, but it does mean that this is a point of interest that we have to keep an eye on. Sorry about that. Two minutes left. It's close to offering us a pattern. The only problem I see right now with this, we're because of a range day. Like I said earlier, we cannot put it past the trader to try to retest, right? To try to retest that high, or not retest that high, but retest the range, right? To go back into the range. So we could very well see the market try to push all the way back up again. So this is what we have to be very mindful. And this is what the battle that you see right there, right? All this noise, it is the market fighting, trying to, the bulls are trying to push the market back up, and the bears are trying to defend their position, right? So, and we see a lot of morning stars and dojis, and for that it's making me uneasy, trying to maybe short this market. Now if we try, because we see we have an open loop, right? We have an open loop right here that hasn't been retested yet. So right now, right, if we did find a pattern to get in, our risk reward ratio, right, it would be 3.75 points per contract for 2.5 points, right? What is the high right here? Well, 2.5 points of risk. So that's not a very good risk reward ratio, but because also of such strong movement all the way down, it could always indicate, right? Because if we do a 1-to-1 ratio, and let me look what could be our next target, right? If we do a 1-to-1 ratio, and we bring it back up here, give me a second. I've got this, and minus 100. Oops. Just adjust that. And then there you go. So we could have, like, this could be the next target all the way down here, right? And if we look, we took it down, that's a 16-point a 16-point risk reward ratio for a 5-point risk, right, per contract. But then again, have to be very careful, because if we look, when we touch right here and we touch right there, we saw that we had some buyers pushing the market up. So right here, this is a danger zone. We have to be very careful about this zone right here, right? So anyways, that being said, we've just hit our 8 a.m., our 11 a.m., sorry, Eastern Standard Time, time on the clock. it is time for us to close our trading room for today. I hope to see you guys again tomorrow. But before you guys leave, if you did follow on your charting software, and if you do have a charting software, please go and open your trade window. Just give me a second right here. Let me bring it up so you see what I'm talking about. Bring up your trade order window, making sure that you have no pending orders waiting to get into the market. You can click on cancel, making sure that there's nothing left waiting, right? You don't want to go out for lunch and come back and see that you forgot to close an order, and then you're in the market or you lost a buttload of money, right? So please make sure that you've closed all of your position, all of your what do you call it there, your orders. Then after, let's bring up your give me a second. Let's bring up your journal, right? And in our journal, we're going to type in the rest of our trade, right? What we just give me a second right here, like this. There you go. Excellent. Perfect. So today's trade was a small trade with small profit because the market did not offer the right condition for me to stay into the trade. Although it did complete its objective. So next time, we'll keep an eye on that to make sure, just give me a second, to make sure to try to maximize our profit while always keeping an eye on the market condition. Now, the next thing that we're going to do right now is we're going to save today's chart, right? I'm going to put in the trade for the day. Awesome. And then after, I'm going to save today's chart. And to do so, I take my screen print software, I take a screenshot, and then I save this into my computer, and I will make a copy right here, and I will send you a copy right now. If you look into the chat box, there you go. I've just posted the link, and you can click on the link and save the chart onto your computer. And as for myself right now, I'm going to put it into my diary for today. I'm going to add the picture. September, there you go. And then this weekend on Sunday, when we're going to do our planification for the week, we'll be able to go look at all of our trades, all of our charts, and then get ready for the next week. Make sure that we keep an eye on the market condition. Now, one last thing in our journal that we want to add, and this is very important. Today, I am very happy I was disciplined and patient, right? This is very, I was disciplined and very patient. And tomorrow, I will improve my analysis. And why am I typing this, right? We need to reinforce the things that we do good, and we need to pinpoint the things that we need to work on. So whatever that you feel happy about yourself today, you put it in, and whatever you are not happy or you need to work on about yourself, you put it in as well. And then tomorrow, when you get into in front of your computer and you look at your journal, then you'll have some points that you need to keep your mind focused on to improve yourself, right? Because this is what it is to be in the market, is to know yourself and be aware of yourself, and then work on those little quirks that needs to be worked on. That being said, I hope that you enjoyed your class. I will see you tomorrow at 6:20. I will open the class again. Until then, take care. Have yourself a wonderful day. Close your computer, go do a little bit of exercise before you go back into the afternoon session if you trade in the afternoon. Until then, guys, have a good day and take care of yourself. Bye-bye.